So did Goolsbee quell fears of a rate hike next year? Because that was sort of entering the conversation. Torsten Slok over at Apollo mentioned that in a research report on Wednesday. But the data today, plus Goolsbee's comments, does that sort of take that off the table in your view?
For a little while. Right? Until we get data that, right, exactly. I mean, so when I looked early this morning, the handles were maybe down 50 or so. And then after that PCE number came in, cooler, that was down about 24. And I don't know what the rest of it was as the day went on. Maybe it was those interviews. That could definitely be it, because those were very bullish. But I think also some progress on the debt ceiling, that helped as well. And as well as the magnitude of yesterday, just kind of that sell-off was getting a little bit sloppy. So I feel a little bit better. It's nice to see that CPE number come in, or PCE number come in a little bit better, but I still think the trend is toward inflation and not a lot of cuts.
Right.
Yeah, look, if the numbers bear out what the market really how they reacted to the PCE. You went from you basically rallied almost 260 basis points from 9:50 a.m. until the markets then peaked up, and then weakened just small off to the end of the day. But that translated into a major reversal over where we saw futures. So you looked at your screens in the morning before the markets opened, and you said, wow, this is kind of sloppy, and we're probably going to go into the weekend, and people are now reassessing their view of the Fed. But Karen, I think you're right. I mean, sloppy in terms of how yesterday traded, or how the couple days have traded, really since those Powell comments. I think that has as much to do with anything. I think markets are jittery. You look at the 5-day on the S&P, it's we're down 3%. I mean, it's been, even with this move today, it's been a rough period after such an extraordinary period for equities, where the assumption was that inflation was your friend. We had a number of other prints going into the Fed meeting that had you believe that while inflation isn't out of the picture and disinflation is certainly a thing of yesterday, that the Fed is not going to be hiking. Having said that, that is the biggest risk for 2025 at this point. And it's not that the Fed will hike, it's that the perception of the Fed will change.
Yeah, I agree with that. I think the important thing is they're not going to be hiking. So whether they're cutting by twice or 4 times, not really the issue. The issue is, do they hike? But Powell, the day of the meeting, said that rates are meaningfully restrictive.
Right.
So he agrees with Goolsbee. He agrees with Williams. I think that, and he also doesn't want unemployment to tick up. So you do have the Powell put. Like, that's the way I saw it. I thought the markets totally overreacted to the commentary. I get it. He was a lot more hawkish than the market wanted him to be. I don't think the narrative has changed. Economy does worse, he's there. He'll cut more aggressively. And he's got plenty of tools, or plenty of time, and plenty of basis points to actually cut. I think the market got it wrong, but the market always overreacts.
I mean, there is still the sort of the conundrum, the squaring the circle that needs to be done between raising your inflation forecast and taking down the number of rate cuts. And that's still, even with the Goolsbee comments, Mike, that puzzle still remains.
Yeah, I think that's definitely true. I think what Karen was probably also referring to is that, a lot of the secular pressures that are inflationary, it's not like those things are just simply going to go away. We are at relatively full employment. So, of course, labor costs are something that we still obviously have to keep an eye on. I mean, to me, though, I think the important thing, just in terms of what Tim was saying, which is that the market is clearly jittery, that bad news was really greeted with a very severe knee-jerk reaction. I mean, dropping 300 basis points in the S&P over the course of 2 hours sort of speaks to the fact that people might be a little concerned about the valuations. One other point I would add, and I don't think that's as true this week, but going into next week, and that is that we are, going to have a little bit less liquidity. I mean, there are going to be people who are not looking at their screens for all of next week. And, that can also create a little bit more of that kind of jump risk that we saw in prices this week.
Yeah, the liquidity gets drained away, and also there's the seasonality. Seasonality typically happens in the second half of December, and here we are entering the Santa Claus rally period.
Oh, ho, ho, ho. And I do think it's been quite joyous to this point. And if you look at where markets really haven't had a chance to test the 50, that's what the S&P did. Hasn't tested the 50 really going all the way back to September. And I remember that since that last September Fed meeting, where, yes, rates kind of then started rising, but markets also rose. And if you look look at the NASDAQ was up almost 14% from that Fed SEP 17 meeting into this last Fed meeting. So I think a lot of this is just a function of where we've come from. It's been a really joyous holiday period, and again, since Thanksgiving. And the economic data, let's not forget, forget inflation. The data around retail sales, the data around the labor market, even there are people, we've had them come on our show talk about, they even think that the ISM manufacturing is doing a bottoming thing after a couple of years of what we know has been recessionary manufacturing activity. So the economy's in really solid shape right now. The market performed like that. So, yeah, I mean, it's kind of, to me, nice to see the reactions to the Fed, almost like they used to be. In other words, where you didn't know what the Fed was thinking. Remember when the Fed was more opaque and less transparent, and it really felt like those were days where you truly got the cha-cha-cha.
More clarity with no clarity.
Yeah.